Ignition. We have liftoff.
Roadzen Inc. You don't know about this company. This one was a SPAC. As you can see, it was around $10. De-SPACed in 23, a couple years ago. Plummeted in the dumpster. Yes, they're down 86%. The past 6 months, they've been popping off. Why? We're going to get into it. Who is Roadzen? We got a lot to talk about with Roadzen. They're an Indian company. Oh, but they're making headway in the European Union. And really what it got on my radar was their U.S. expansion plans. Let's find out more about this company. I think you're going to like the CEO. You're going to like where the financials are headed. We have a lot to talk about. Let's get into it. Roadzen is building the next generation of auto insurance. Their technology is transforming every step of the auto insurance journey. Safer drivers, dynamic underwriting, policy sales, instant claims. And they have AI at the core. Award-winning AI research producing industry-leading models in telematics, computer vision, language models, and generative AI. They're an applied AI research company shaping the future of insurance and mobility.
Computer vision and driver data to reduce accidents and improve safety. The multi-camera fusion system precisely monitors driver behavior and road conditions, sending instant alerts for speeding, sudden braking, and distractions. It enables personalized training and granular insurance pricing based on driving habits. Fleet management tools like route optimization, electronic driver logging, and analytics ensure efficient operations. Drive safer and smarter with Roadzen.
Roadzen's DrivebuddyAI is now the world's only driver monitoring system validated under both EU and Indian safety standards. DrivebuddyAI, world's only dual certified DMS, validated under both EU GSR 2144 and India AIS 184 safety standards. We are proud to be the only company now ready for both European and Indian standards, independently validated by leading labs for two of the most important automotive markets in the world. The market is demanding a new level of technical capability and precision, as many existing systems struggle with excessive or inaccurate alerts. The need for greater accuracy and reliability is the true differentiator in the real-world AI, and that's exactly what we built. Fewer false alarms and trusted real-world performance. With validated compliance for DMS in our single-box 5 compliance solution, we're fully prepared for the EU market and excited to showcase it live in Cabin 2025 in Barcelona. And this is the part that really got me excited, this news. Roadzen signs definitive agreement to acquire majority control of a commercial auto insurance broker, expanding its U.S. footprint. The acquisition is non-dilutive for shareholders and expected to generate over $30 million in annual premiums, with $8 million in annual revenues over the next 12 months after closing, and a 25% net income margin. Roadzen announced that it has signed a definitive agreement to acquire majority control of a commercial auto insurance broker and managing general underwriter, MGU, operating across several U.S. states. All right, we're starting off with California, Texas, Illinois, and New Jersey, and serves a small and mid-sized fleets through an expanding national network of agencies and producers. It also maintains Lloyd's of London cover holder status, enabling it to underwrite specialty transportation and commercial vehicle risks on behalf of Lloyd's syndicates. And they talk about the U.S. market being estimated at $75 to $80 billion in annual premiums. And the CEO said this acquisition is a strategic leap forward in Roadzen's U.S. strategy. It strengthens our distribution, adds several new carrier relationships, and brings deep commercial auto underwriting expertise and exceptional leadership talent. We're deeply impressed by this team. They are exceptional leaders who have built a high-performing business in record time, and we're proud to welcome them into the Roadzen organization. And as we discussed earlier, Roadzen's DrivebuddyAI secures EU's general safety regulation compliance, becomes the world's only driver monitoring system validated under both Indian and EU safety standards. And DrivebuddyAI's dataset has now surpassed 3.5 billion kilometers of real-world driving data, nearly doubling in just 4 months. This extensive data foundation has consistently demonstrated a 70% plus reduction in accidents, validating the platform's ability to improve driver behavior, fleet safety, and risk management for insurers and mobility operators worldwide. And on November 14th, Roadzen issued earnings, and I was loving it. $13.7 million second quarter revenue, a 15% improvement over prior year quarter, and 5th consecutive quarter of adjusted EBITDA improvement. The company continues growth momentum, reduces net loss 90% over prior year quarter, and accelerates path to adjusted EBITDA break-even. It sounds like they're going to break even next quarter. This stock is going to start popping off, I think. We'll listen to the CEO in a minute. He'll talk more about that. Now, The highlights: improving fiscal Q2 and record 6-month revenue. Revenue increased 25% quarter over quarter and 15% year over year. They sharply reduced net loss and fifth straight quarter of adjusted EBITDA improvement. Quarter 2 net loss narrowed to $2 million from $21 million the same quarter last year. 90% year over year improvement. And adjusted EBITDA loss improved to $1 million from $2 million. They're going to break even next quarter. They did some debt extension agreement in principle and a series of strategic wins strengthening global expansion. As we talked about earlier, DrivebuddyAI achieved EU regulatory validation and surpassed 3 billion kilometers of real-world driving data. Roadzen also secured a major European OEM insurance mandate and signed a definitive agreement to acquire a majority interest in a U.S. commercial auto managing general underwriter, reinforcing its position as a global leader at the intersection of AI, insurance, and mobility. The CEO? We raised over $11 million in the last 4 months with minimal dilution to shareholders from some of the world's leading technology investors, delivered our 5th consecutive quarter of adjusted EBITDA improvement, and achieved 90% year-over-year reduction in net loss. Several key partnerships and contracts are set to come in, positioning U.S. for accelerated momentum in the second half. Roadzen wins major auto insurance mandate worth more than $20 million in annual premiums. Roadzen announced that it has won a mandate to act as managing general agent for one of the world's top 5 car makers, managing its insurance program to being rolled out in a major European market. Now, India is at the center of one of the most compelling global growth stories. The country recently surpassed Japan to become the world's 4th largest economy and is expected to double its GDP over the next decade. It's already the 4th largest auto market globally with more than 4 million cars sold annually, representing an incredible growth opportunity in an industry increasingly shaped by AI and technology-driven innovation. And the new regulations that have come out are expected to further accelerate adoption of advanced driver safety systems, where Roadzen's DrivebuddyAI is the only validated solution positioned to serve more than 1 million new commercial vehicles annually, underscoring Roadzen's leadership in applying AI at scale to real-world mobility challenges. Now, I like to invest in companies with intelligent people leading the charge. I want a management team that I can trust. The CEO, Rohan Malhotra, our CEO, has served as the Chief Executive Officer of Avikara, an enterprise software and data analytics company that provided product development service to the Fortune 500 companies. Our CEO holds a bachelor's degree in engineering, Delhi University, and a master's degree in electrical and computer engineering from Carnegie Mellon University, where he studied AI and robotics.
Welcome to the New York Stock Exchange. I'm Jane King, and today we're talking to Rohan Malhotra, founder and CEO of Roadzen. Roadzen is ticker RDZN on the NASDAQ, and it's a pleasure to see you back here in person. You had a good quarter, beating expectations, it looked like, across the board by a lot, actually. So, analysts were expecting revenue of $12 million. You delivered $13.7 million. It was almost a 26% sequential increase compared to the first quarter, 15% increase year over year. So what would you say went right for you in the quarter?
I think we focused on 3 things in the last full year: is increase revenues, bring in high quality contracts into the company, and extend our leadership in AI innovation for insurance and mobility. I think the company is doing a very good job of making sure we meet those expectations. And what you see in the quarterly results with $13.7 million revenue, with an adjusted EBITDA loss of roughly $1 million, and we are trending to break even. This is our 5th straight quarter of EBITDA gains, and we expect the company to hit break even in the next quarter. And so this is kind of like a big deal for us. This is the kind of thing we've asked investors to focus on. And we think as the company grows, today we're at a run rate of $55 million in annual revenues. We want to grow towards $100 million in annual revenue run rate. And we believe we will be one of a very few AI companies in the world that have, let's say, 50 to 100 million revenues, are trending to break even, and are continuing to innovate with fundamental and real innovation in insurance and mobility. So we think that's kind of the story for this quarter.
What can we expect for the top line then for the remainder of this year and into 2026?
Well, we haven't given guidance on that, but we, believe, as analysts are expecting upwards of $60 million in revenue, which would be above 40% growth from last year. We would expect to hit adjusted EBITDA break even for the year, and we think like those are the metrics to track. One of the things is we announced a couple of major deals one with a very large automaker, an acquisition. Those are not yet even figuring in our results because we just announced those. These will start contributing. So we anticipate we can hit the revenue numbers and the EBITDA numbers that I anticipated from the company.
And also noteworthy was consistency in reducing losses. So it's your fifth straight quarter of adjusted EBITDA improvement at roughly a loss of just $1 million for the quarter. So it was about half of what you were last year at this time. So you're close to profitability, right? I mean, what are your thoughts on that?
I think, look, when we went public, we were at a $3 million adjusted EBITDA loss. Now we are at, last 6 quarters, we've seen sequential gains. We're at 1 million of adjusted EBITDA loss. So you can see a straight path that as we are gaining revenue, we've done incredible job on cost control, and we are using AI internally in the operations to actually increase leverage. So we don't have any big investments to make. Every new dollar of revenue we bring in increases our margin, increases adjusted EBITDA, and that's kind of the key story. So we are not just building AI for external clients. We are using it internally to reduce our costs and to grow revenues. So when you see that figure, it's actually the result of multiple quarters of work that we've put in building our internal operations to that capability.
Yeah. Oh, and the balance sheet gets healthier. It seems like every quarter